Welcome. It's World Soil Day, a day to raise the public consciousness of the importance of healthy soils. But by now, everyone agrees that soil matters. Farmers know it, food companies market it, policymakers write endless reports on it. And yet, the FAO reports that 1.6 billion hectares of land are degraded due to human activity, with over 60% of that damage occurring on cropland and pasture land. 1.7 billion people live in areas where crop yields have declined due to degradation. So this creates an uncomfortable question. If everyone agrees that soil health is important, why is soil degradation getting worse? I believe it's because the financial system is flying blind. It cannot see soil conditions, so it can't price it. We value farmland by location, by yield history, by comparable sales, but almost never by the health of the asset itself. And that creates a massive structural problem. Lenders can't distinguish between a farm that is building resilience and one that is degrading its natural capital. Insurers can't adjust premiums based on actual risk, and landowners can't verify what is happening beneath the surface. The result? A systematic mispricing of risk across $50 trillion asset class. We aren't going to solve that in the next hour, but we can start mapping the solution. I've invited three experts working on critical pieces of this puzzle: measurement, finance, and policy. To guide us through this, I'm going to hand it over to my colleague, Dimitri. He promised to keep us focused on what's actionable and ensure that we don't hide behind technical jargon. Dimitri, take it away.
Thanks, Matt. And just so everybody knows, Matt is our chief soil scientist at Syngenta, which means that he's forgotten more about soil than most of us will ever know. But Matt, don't go too far because we'll definitely want you back at the end. Thank you.
Got it.
So here's why you should care about this conversation, even if you've never touched a shovel in your life. Half of the world GDP, about 50 trillion US dollars, depends on nature functioning properly. And the foundation of that nature, soil. But here's the problem. Often soil is treated like it's infinite. Most of the time, lenders give the same loan terms to a farm with degraded land as they do to a farm with rich, resilient soil. It's like insuring two houses for the same price, one with solid foundation, one built on sand, and pretending that they're equally safe. My name is Dimitri. I recently joined Syngenta, and before that, I spent over 20 years at the BBC, most recently as the head of rural affairs, and also looked after the environment and natural history program. But today we've got three incredible guests, three scientists with PhD in ecology, in biology, and in environmental studies, and they all have taken an interest in farm economics and how to make healthy soil pay. I'll do the intros in a second. Then we'll dig in, pun intended, and after we'll open it for Q&A. So do drop your question in the comments box below as we go, and feel free to say hello and where you're from, and we'll try to answer as many questions as we can at the end. All right, let's meet the people who are actually solving this. First up, Emma Fuller. Emma is the co-founder of Fractural Ag, which is doing something radical. They're giving farmer equity capital, not debt. And they're betting that farms with healthier soil are safer investment. And before Fractural Ag, Emma led the soil carbon program at Corteva. Emma, welcome. A quick question before we dive in. What's the weirdest thing you've learned about soil since you started doing this work?
I think many of these statistics that are floating around, especially today on World Soil Day, but I think the one that's most compelling to me is more than 56% of species globally are found in soils. And we know very, very little about those 56% of species.
Oh, I love those facts. I've got other questions about soil that I really want the answer, but let's carry on. And actually, am I right? You also have got a small farms.
That's right. Yeah, we do organic vegetables here on Vashon Island. So farm stand, local restaurants, very different scale than many of the farms that we'll probably talk about more in this session.
So scientist and farmer, fantastic. Right. Next, we've got Dan Kane. Dan is the director of Mad Science at Mad Agriculture, which, yes, it's indeed called Mad Agriculture. And yes, it is inspired by Wendell Berry's Mad Farmers poems. And if you don't know those poems, Google them after this, and they'll change your life. Dan is also a soil scientist and a biogeochemist. He spent 15 years figuring out how to measure soil carbon and prove that healthy soil actually makes far more resilient. Dan, what is a biogeochemist?
Yeah, it's just what it sounds like. It's somebody who studies the intersection of those three fields: biology, geology, and chemistry. So it's basically a study of how biological organisms and ecosystems influence the cycling of nutrients and compounds in the world, and then how the Earth's geological history shapes all of those different processes.
Fantastic. And finally, Jason Neff. Jason is our principal scientist for soil and climate innovation at Syngenta Group. He got a PhD from Stanford, was a full-time academic until recently as a professor at the University of Boulder, Colorado for over 20 years. He has over 100 scientific publications and worked on restoration projects from sub-Saharan Africa all the way to Brazil. Jason, what's the most counterintuitive things you've learned about soil?
Most counterintuitive. So there are these soils in the Brazilian Amazon that are really challenging. They acidify. They're very difficult to work. They're hard for agriculture. But the counterintuitive thing is that people long ago figured out how to make this work and have created these little pockets of the most productive soils you can imagine. So it's amazing how hard it can be, but also how you can find solutions even in these really difficult spots.
Fantastic. Hopefully we'll be able to talk about that a little bit. So today we're going to talk about three things. First, the hidden cost, how much money we're wasting just to keep degraded soil productive. Secondly, the proof, why healthy soil is actually a financial asset, not just a feel-good story. And thirdly, the solution, how we can finally start pricing soil correctly and unlocking capital for farmers who are doing the right thing. Reminder, put your question as we go along, and we'll try to come to many of those as we can at the end. So, Jason, let's start with you. You published research showing that US corn farmers spend about $500 million a year on fertilizer that doesn't actually increase yield. It's just compensate for the fertility the soil has lost. That's a staggering number. Can you break that down? And are we basically paying a degradation tax without realizing it?
Yeah, absolutely. And let me actually start with a story, because we're talking about the hidden costs of degrading soils. But prior to coming to Syngenta, I spent a lot of time in sub-Saharan Africa, and I think it's like some of the most sort of heart-wrenching things I've ever seen in my life have involved soils in Africa. I remember being on a farm in Tanzania looking at a maize crop, and the woman who was the primary sort of farmer for that plot of land, the land soil was eroding, the fertility was declining, and her livelihood was threatened. Some of the most poor, most vulnerable people in the world are threatened by soils. So, we did a lot of work in that setting, but one of the things that we brought back when I was working at the university was this question of, well, what about these highly productive areas? You fly into Indiana or Illinois or Iowa, one of the most productive areas in the world for agriculture, and we know that there are still problems. The soil is not as fertile as it could be or should be. We decided, well, why don't we try to quantify this? Why don't we try to figure out actually what has happened? And I won't go into the details here, but the sort of long story short is the U.S. has great agricultural data, and so we were able to do a quantitative analysis across the U.S. and corn growing areas, where we looked at how much organic matter that contains nitrogen and phosphorus that helps support crops was there in the natural systems, and how much is there currently in the agricultural production systems. And then we estimated the difference that is there and how much that can contribute to the fertility of the system, because as that organic matter turns over, it provides fertility to the plants. And the reason this matters is because we have a lot of opportunities, which I think we'll hear about today, to increase those organic matter and fertility levels. And it turns out that difference between what it was and what it could be amounted to about $500 million per year in expenses that are just kind of going out the door because you don't have that sort of native fertility. And so that was a real eye opener for us in terms of thinking about these hidden costs and the ways that we can actually try to address those.
It's not always hidden cost, isn't it? Because the price of synthetic fertilizer for farmers is a huge cost to them, isn't it? So if they can use
Yeah.
that.
Absolutely. It's a little bit like insulating your house, right? You know you're going to save money on the long run in your heating bills, but it's kind of hard to tell on a month-to-month basis how much you're saving. And so it's maybe it's not so much hidden as it's a little bit buried in the noise.
Yeah, so it's insulating your house. So it's like if you try to heat your house with broken window,
Exactly.
you'll still stay warm, but you'll just spend much more staying warm.
That's right.
And is this just a US problem, or is it this happening globally? Because I know you've worked on projects like Reverte in Brazil. Are we seeing this hidden liability on balance sheets worldwide?
Yeah, I think everywhere where you have agriculture, you have opportunity anyway to be more efficient. And I think soils, I'm sure we're going to hear more from Dan and Em in a moment, but soils are one of the real places where those efficiencies can appear. And we have a lot of opportunity, I think, in those soils across all systems to make the system more efficient and effective for growers.
Hello to Amal as well, who's joined the conversation online. Thank you. Dan, if I can move to you. I mean, we just heard Jason was defined the cost of doing nothing. Your research, Dan, suggests that fixing the soil doesn't just save money on fertilizer, it actually acts like an insurance policy. And you and Emma co-authored the paper that links soil organic matter to crop insurance payouts. What did you find? And does healthy soil actually protect a farmer's bank account during a drought?
Yeah. So this paper that we worked on, it came out of a working group that we were both part of. It was an extension of some previous research I'd been a part of, a similar paper a few years prior. And our basic goal was, if you look into the literature, there's this maxim out there, right? That healthy soils are resilient. They support resilient agricultural systems. There's a lot of, sort of farmer experience that supports that. I know myself, I remember I was working on a research project at Michigan State during my master's in 2012. There was a huge drought in 2012 all across the upper Midwest. And I could see the different plots that were doing better than others. And I knew, because I had done soil testing, some of them had higher organic matter. And so that kind of got the hook into me into thinking about this topic and trying to make this connection. But when you go into the literature, there's not a lot of clear evidence that it sort of connects the dots all the way from soil up to resilient agricultural systems. There's smaller studies, experiments that show us that, say, soil organic matter or certain soil mineralogical properties like clay content will help soils to, have water infiltrate and to retain that water over time. But is that a big enough effect that we see it in terms of actual outputs? Are yields better? Are yields better protected under drought conditions? Things like that. So our goal with this paper was to see if we could find signal in the noise. So we went to the USDA. USDA has, amazing data around, yields and soils across the entire United States. And we used it to basically connect those dots. And what we ended up finding was that across the US, soils that had higher, or counties that had soils with higher organic matter, tended to fare better in moderate and extreme drought conditions. So if you're thinking about, basically the I states, Illinois, Indiana, Iowa, they, under really, extreme drought conditions, saw lower yield losses, and that actually translated into crop insurance payouts. They had fewer crop insurance liabilities as well. So, we began to see both a sort of physical signal as well as a financial signal. So I think it was good evidence to sort of connect the dots to say that, yes, healthy soils can help to, support resilient systems and reduce those losses.
And then one thing I've read, and I'd love to know if it's true or not, that soil with 5% organic matter can hold something like nearly 200,000 gallons of water per acre. compared to soil with 1%, which hold less than half of that, which would illustrate the importance of good organic soil matter. Is that correct?
Yeah, there's a lot of figures like that out there. I don't know that the exact number is correct, right? And sometimes they're based on these laboratory experiments with pressure plates that tell you those differences. But the basic, sort of suggestion of that stat is true, that soils that have higher organic matter do tend to be able to hold on to water better. They have this structure that's really like a sponge. That's the best analogy you could think of, right? They have all these nice pore spaces. Water is able to infiltrate, from above, and the soil is able to sort of hold on to it more tightly through, longer periods in between rain or irrigation events. So if that number isn't exactly right, the idea behind it is definitely right.
And the markets usually obsess over maximum yield, but in a world of extreme weather, is yield stability becoming a more important, valuable metric?
I think, yeah, that we're at the beginning of seeing it becoming an important metric and figuring out how to financialize it. So Emma will talk in a moment. I think their company is a great example of figuring out how to price in resilience into the land asset itself. There's people working also on trying to figure out how to price it into crop insurance. Can we understand, hey, soil health, does that sort of reduce your risk? Can we factor that into actuarial tables? And then I think even to some extent, if you look at carbon offset markets and the ones that are trying to utilize agriculture and do agricultural carbon markets, that's part of the premise behind them too. It's not just about sequestration into the soil, but also about the co-benefit of resilience. So I think, we're at the beginning of figuring out, how do we, price in, resilience into markets that are mostly right now focused on optimizing or maximizing production. So it'd be interesting to see where that space goes.
Great. And I see we started getting some questions that are coming in. We'll come to those in a minute, including a question from Derek, which I definitely want to bring up a bit later. And actually, Derek also separately asked, he's quite shocked that I mentioned Wendell Berry. I've actually read his writing. The answer is yes. Anyway, Emma, we've established that degraded soil is expensive and healthy soil less risky. So here's the big question. If the risk is lower, why isn't the capital cheaper? You've built fractional ag on this premise. You invest equity in farmland and offer discounts to farmers who practice soil stewardship. Are you doing that out of charity, or is a regenerative farmer simply a safer investment?
Yeah. So the way that our investments work is we do minority equity investments alongside farmers. So rather than the traditional sort of farmland investment model where you buy farmland, rent it back to farmers to farm, or buy it and manage it yourself, we're putting minority capital injections basically into the land to say then the farmer can use that to invest in their business however they want. So we're really partnering as a passive capital partner, because these farmers themselves know best how to manage this land, know what their business needs. That's much better than us coming in and being like, no, we have an idea. And then you're right, as a part of that, we discount that cost of capital based on how much they're investing in the soil through sort of typical regenerative practices, cover crop, no-till. They choose those practices from our sort of qualified set of things that have strong empirical research. And again, all of that is balanced to say these farms know themselves, cover crop's not a good fit for my operation, right? Instead, I might adjust my tillage, or I might change the way that I do crop rotations. And all of that, to your point, is not charity. It's all based on a market rate investment. And it's a lot of the work that Dan and I, when we wrote that paper in 21, right, it was crazy to me that we could see this broad scale statistical results across the entire US Midwest Corn Belt, that there was absolutely lower risk. There was absolutely better cash flows happening, and no debt product responds to this. No debt, no farmland mortgage gives you a different mortgage rate because of the quality of your soil. And in part, that's because it's highly regulated. It's a regulated space in the US in particular, right, about what you can or can't do, how you can underwrite. But now being in an equity position, we have a lot more freedom for how we underwrite our soil and see our risk. And so we absolutely took the best science that we could find, which we knew was out there and started to make that our investment thesis. And we're already seeing it, right? So we've raised and deployed millions of dollars on this alongside farmers. And we see it in the operations that we work with. We see it where a farm has a low quality soil on paper, right? And then when you look at the history of practices they've been doing, cover crop, no-till, et cetera, you look at their yield performance, they're out yielding county averages, right? So it doesn't matter that it's corn and soybean, the investment in their soil has sort of given them this huge margin. And it's a margin that's very difficult for anyone to take away, right? No input company can really touch that margin because it's an investment in the land itself. So it's doubly protective. So it's a pretty amazing investment opportunity. And the audacious goal of Fractal, we're raising our first fund now, but the goal is to make this the standard for how we do farmland investment and make one more block of our sort of broad economy sort of aligning to these incentives of like, when you invest in this, it's that there's upside for the farmer and there's upside for anyone who's got a passive investment stake, i.e. any sort of investor. So we want this to be sort of the standard, but I think it requires new thinking to build these new models to take advantage of the effects that we already see in the data.
How much are you hoping to raise with this?
Yeah, so for this one, it's a 50 million sort of type dollar fund, right? And that sounds like a lot of money. At least it did to me coming from outside of finance. That's just a very first step, right? So it's a multi-trillion dollar asset, right? And so to really change the game here for how we allocate capital, whether it's debt, whether it's equity, no matter how we do it, this is going to take billions of dollars to do so. And when you look at those various reports from various policy X, Y, and Z, that the gap in regenerative transition is something like, I don't know, several $billion. And we have maybe a couple $100 million sort of allocated towards that across the board. So I think there's been some comments in the chat. There's a big finance gap for how we actually get the system to look like this. And so it's going to take a lot more creative thinking and creative models for how we actually make this pencil, as opposed to just saying like, oh, it's great, we should do more of it, without actually putting capital behind it.
So something that was mentioned at COP, and I can't remember the exact number, maybe one of you can, but the amount of kind of transition finance that goes into agriculture is only something like 3%, where actually the amount of greenhouse gas emission that comes from the entire food system, not just agriculture, is nearly a third of it. I think agriculture is, depending how you calculate, is probably around 20%. And so there's a real gap in how much transition finance there is accessible for the farming community, and the kind of work that's ahead of us. But you've been quoted talking about the need to attract soulless capital, basically investors who don't care about sustainability, they just want good return on investment. How do you prove to a pension fund that soil health equals better financial returns?
Yeah, my comment there was really, I think a lot of us are passionate about the multiple benefits that soil health gives: economic, rural livelihoods, health, and biodiversity, right? That's, all of us have PhDs in ecology or soil science in this call. And I think all of us were brought, all right, well, you'll get there. But all of us, right, all of us deeply care about that. But for this to be a systemic change, to be a global change, it can't be driven off of our own sort of personal values. There's just not enough to drive this, right? It has to be like baked into the value, the economic value of the system, if we're using private markets as an engine to change. And so that's what I meant when I said soulless capital. I want them not to care about soil health and still be investing in soil health, because it is the best business opportunity. So the way I think that we show this, pensions, big institutional sources of capital, they require track records. They require to see this deployed. And so it's actually less of a like, let me tell you a story about the number of earthworms, and way more about, you can just look at our portfolio. We are outperforming traditional farmland alternatives, and you want to be in farmland because it's a diversifier, because it's lower risk, it reduces volatility. There's lots of like valuable pieces to have that in your portfolio. But we want two things to be true. One, we want that capital to partner with farmers and not displace it. And two, we want it to invest in soil health. And we also want it to not actually care about the sort of good fuzzy feelings they get from either, because again, that just shows this is the best business outcome. And that's how we think we change farmland investing, partner with farmers and invest in farmers sort of at scale. So it's track record. And we're this is our first fund. We're 2 years in. Whereas I think the first strategy that I'm aware of that explicitly pencils this sort of soil health in. So again, they'll take more people thinking about different business models out there, I think, really keep the snowball rolling.
Thank you so much. Let's now open it to question. There's quite a few questions that have come in. Let's bring Matt back in, because Matt is also a source of a lot of knowledge. So let's bring Matt back into the room. And I'll start with the question from Derek. It's quite a long question, but really interesting. I'm not sure I can see the full question in my here is so long that let me see if I can find it somewhere else. So Derek is asking, the issue of improving environmental and economic outcomes in agriculture is that someone has to pay for these natural capital benefits. There's no free lunch. There's no free lunch. Internalizing environmental costs in the current agricultural markets, i.e. detrimental market externalities, come at an economic cost to the customer via paying a higher price. To farmers who must pay a higher production, the higher production, transition costs, and opportunity costs from adopting improved practices, banks and investors' return on investment or public taxpayer and subsidies. So curious about pesticide impact on natural capital. What about the detrimental impact of both activities and inactive ingredient, such as PFAS, is quite long, such as PFAS. How do we move to a more agroecological system that renders Syngenta and similar companies current offering? I'm afraid it was so long that it stops there. I can't. But so it's basically the cost to the natural capital. Is this what's the, I guess, the balance of benefits for the natural capital of using some of those input costs that may have an effect on the wider environment? What's the balance? And that's open to all four of you.
I can maybe start. There's a lot in that question, more than we have time, of course. But I think the question is getting at one of the core issues in our current ag system. Our ag system, I've appreciated this much more and more over the last few years. It's very siloed, right? You have inputs, you have farmers, you have off-takers, you have storage, you have consumer-facing companies, and of course you have regulation and all of that sitting on top. And so from at least a simple commentary, I think from a macro perspective, we've got to figure out how to bring that system better together. There are impacts and benefits from the food system. We've got to work together to try to feed that back through the value chain, all the way back to production and inputs, in ways that bring these costs forward into the system in a way that's more transparent. It's not an easy question. It's going to take time, but part of this is part of the issue is the segregation of the agriculture value chain. And I do see some opportunity here. I see companies working together. I see a lot of work to try to figure out how to bring different types of commodities, differentiated commodities to market. And there's a lot of technology innovation on the input side that I think will address some of those questions.
There's several questions in around the same theme. Sorry, I'm just scrolling through all the question. There was something on how will Syngenta connect soil health to food nutrient density and future to human health in a business model? That's quite a tricky question.
Yeah, I mean, I guess I'd start by saying we'll follow the science on that, and I think the science is still early. Right? The U.S. National Academy of Sciences had a report on this link between soil health, nutrient density, human health. I think there's still a lot of uncertainty out there. It was kind of inconclusive, and I think that the degree to which the soil health and not just the fertility affects the nutrient density is a really interesting topic, and I think it's one where we want to be really thoughtful about that link. And if there are clear linkages between soil health and the nutrient density, the health of the crops that are being produced, then we certainly, that's an area we want to support. If we can find ways to help farmers adopt practices, or if there are technologies that can help, I think that's really important. There are other connections between soil and human health as well. And soil, we have to take care of the soil because that is the foundation, not just of our food supply, but of all the ecosystem services that soils provide.
Warren is asking, how will you create standard bank agricultural lenders who have access to much larger pool of capital and can extend better financing rates? I guess that's probably for you, Emma.
Yeah, I can take a crack at that. I think it's a great question, Warren. The goal, I think, is not to displace them, right? Equity financing is a totally new form of capital in the capital stack that farmers today don't have access to at scale. So you can get debt financing up to about 40 or 50% loan to value. You can contrast that with residential mortgages, which many more of us are familiar with. It's 80%. Right, so there's like a huge slug of equity just sitting in that land that farmers can't get access to unless they sell the ground, right? And so that's where many farmers are millionaires on paper, right? Because their land is worth so much and it's not accessible, right? And this is especially in row crop operations, which is where we primarily work across the Midwest. It's a really low margin business. It's a multi-million-dollar business, right? There's millions of dollars coming across their books, and margins are like $4-5 an acre, right? And so you can quickly do the math on why they need to be so big and scaled, right? If you're getting $5 an acre and you're trying to make a full-time living, you can sort of do the math yourself about how big these operations end up getting in order to support an entire family. So the point is that this is equity financing. It's minority. It sits up alongside debt in order to help those farms, again, invest in their own businesses. That said, I think a lot of the work that we have done, Dan and I have done, Jason's done, Matt's done, the research is trying to build, and this is a sort of a question I saw from Christina, is to continue to build that evidence base, right? And that's open source work that I'm currently involved in, and I'm trying to pull Dan in, and certainly now at this point, we'll try to pull Matt and Jason in too, right? Of like building this evidence base that anyone can use, that ideally debt can use, right? Because I don't want to compete with debt. I want debt to start adopting the same sort of risk standards. Elena had another question in there too, right? We need to start seeing debt actually adopt these statistics in order for the entire system to start valuing this. And Derek, I think to your point of like, it costs money. It absolutely does. We had a whole conversation prep before this call where we talked about the labor constraints, right? Like we all are shaking our heads of like, yeah, there's like not enough labor, skilled labor sometimes to do these diverse rotations, double cropping, interseeding, et cetera. So the challenges are real. And I would say that if you start getting debt to align or financing in general, now you're saving money when you invest in the resilience of the asset. So it's not just sort of cost side of the ledger. There are some benefits that are also accorded to you. And I agree, there's no one thing that will solve this, and there's no one thing that will solve this like 80%, which is why we have the problems we have. So I think we're all talking about not small pieces of the solution, that it's going to have to be a team of these solutions. And I don't know, I certainly balance and toggle between like, all I can do is focus on one solution. And I really hope there are other solutions that crowd in alongside this as we sort of pave the way and show that this is a bankable strategy.
Matthew is asking if we're going to put the reference to the study we've quoted. Matthew will put those link into the chat after the LinkedIn Live. So hopefully you'll find those there. Christina is asking, can you comment on the importance of data and modeling in demonstrating the long-term impact? Oh, somebody else put a question which moved everything in my thing. Can I find it again? Long-term impact of regenerative agriculture and why it's so important to the development of financial and insurance products that actually meet the needs of farmers.
Yeah, I'll take a stab at this. I think it's critical. That was part of the reason we wrote this paper, is that I think that the sort of regenerative agriculture space and that there's a lot of sort of smaller pieces of evidence, but no one sort of really I've said connecting the dots too many times on this call, but there isn't a lot that connects the dots all the way through, right? It's not necessarily the case that if your water or your soil holds on to a little bit more water, that translates into an outcome that the financial markets care about, or that an insurer actually cares about. So I think being able to sort of really put that together, talk about insurance, they operate on actuarial tables that are all based on past behavior and sort of past outcomes, and that data just really isn't there to really say with total clarity that to the level of detail that an insurer needs. that yes, if you plant a cover crop, it's going to reduce your risk by X%, right? It can't just be sort of directional. It has to be pretty quantifiable, right? In that way. So, and then the other thing, I think, the question also mentioned modeling. I think modeling is going to be sort of critical as well. And modeling also requires data, to sort of really train models as well as, have it data as inputs, because we're moving into a future that weather patterns are going to look way less predictable, right? And if you're using past data to try and predict, future pattern, that's going to start to get less reliable over time. So modeling will, I think, increasingly become a critical tool for really understanding and informing all these financial markets, as the world changes around us rapidly.
Ashton, oh, sorry, did you go ahead?
Yeah, I mean, I'd add, like, we're all talking about trying to create these quantitative links between specific measurable attributes of soil that are responsive to management with risk, with future productivity, with efficiency, and that's great in theory, but actually can be really expensive and and difficult to do in reality, and that the expense, the lack of standardization, challenges with soil lab analyses, all of that makes it a difficult problem. But I think there's a lot of potential in both in not just modeling, but really more of like data fusion. So being able to extrapolate from a limited set of real soil sampling and analyses with sensors in the ground, and then take that and scale up by fusing it with remote sensing or drone-based technology. And then we're really lacking those big data sets that would unlock, AI approaches. Once we can all, kind of work together to develop those big data sets and lower the cost of the data acquisition, I think that really unlocks the predictive capability that would be unlocked with modeling approaches.
Esan is asking how research could assist in achieving the goals we're discussing here.
I could take just one high level crack. I think one thing that I think is implicit in a lot of our answers here and may not be as familiar to folks outside of the system is that the combination of unique soils and climates and crops is really high, right? So there's different clay content, sandy content, right? Like different mineralogy of the soils, the different topography of the soils, different crops, different climate, right? So we have really good data, as Matt was saying, and I think Dan was saying, probably all of us have been saying, right? So we have a great set of field plots in Ohio. We have a great set of field plots in North Dakota. We have a great set of field plots in Illinois. This is just in the US Midwest, right? And this is just in like what we consider like monoculture corn and soy. That's like all the same. It's not the same. And how it responds is really different. And even that Ohio plot that's on sandy soil is not directly analogous to the clay soil just down the road. And so the density, like just the variation you have to sample in order to be able to project across these landscapes is huge. And that's like one of the big challenges where we have individual point fields, right? We have like 100 farms that we have done deep sampling on, but we actually need more like 10,000 farms, right? That's the scale of difference that we need in order to parameterize these models. And so as Matt's talking about research, like fusion between sampling, modeling, and then like remote sensing, we're trying to leverage basically like insights and inferences to like more scalable forms of data collection. But I think, one of the really sad things that happened with the commodity smart agriculture cancellation was this really amazing network of soil study sites that were going to be funded. And I think all of us, this is something that had been put into place by academics and suggested for a long time, that this is sort of the test data sets that we need to be able to really build and support this kind of finance models, new practice adoption, even new production from input companies like Syngenta and Corteva would have relied on this kind of data, because no one company is willing to fund all this. And so it's just really sad that sort of stuff, because it wasn't farmer centric enough, it wasn't immediately putting dollars in farmers' pockets, was erased. And that's the sort of like data foundation that all of us need to build this more aligned system that was just lost. So I think, just to the point of like what can research do, I think it's always new trials, but the more creative thinking of how can we leverage what we have, because we'll always be data limited in terms of, I think, field trials, to make them more applicable broadly across a wider range of soils.
I'd like to try to combine two questions if I can. First one from Chris Thompson. What does Syngenta have in its product development pipeline of next generation product to support soil health by replacing synthetic soil fertilizer, allowing then microbiome to regenerate? Is it more biologically focused or single biostimulant molecules? And there's also another comment, I think, from an anonymous person here, I think, who is questioning our business model, the synthetic inputs, the sale of which your business model actually is responsible for soil degradation. So my question is, how does Syngenta not perpetuate their business model to stay competitive? So can we, so there's specific about biological, and then, can a company like Syngenta actually keep going if we're actually trying to, look after the soil?
Yeah. Biologicals are certainly the biggest growth area, I think, for Syngenta and other companies. And that includes biostimulants, it includes biocontrol, nutrient use efficiency products. So certainly that's one of the areas that I think has a lot of promise to complement or maybe in some cases substitute for chemistry. Chemistry also is getting more and more targeted and lower volumes as it as that improves. But I think also, as Derek said in his comment, there's no free lunch. Ag is full of trade-offs, and we have to consider the importance of land, and that's one of the things we're talking about. So I think we all agree one of the big things we have to avoid is further land use change, further conversion of natural systems into cropland. The reality is that the demand for crops is still increasing. The human population is still increasing. There may be debate about when that's going to peak, but for the time being, we have to meet that need. And I think the best way to do that is to improve productivity on the lands that are already in production, and that means addressing soil degradation around the world in places that are underperforming their potential because of the history, the legacy of past land conversion and practices that mean that we're fighting this uphill battle against soil degradation. So that's one of the reasons we're focused there. And I think from technology is going to plays an important role. If you want to get a lot of productivity out of a piece of land, it's hard to do that without fertilizer, but without other inputs as well, without modern seed technology. So you can't get around the reality of those trade-offs. At least I don't know how.
Yeah, I mean that's the challenge, isn't it? Is that there is no single silver bullets, and as you say, the reality is that the UN and the FAO have predicted that we need to produce 50% more food by 2050 to feed the growing population and the change and the dietary change in the world as well. So that mixed together, they predict that we're going to need 50% more food. So how do we achieve that in a sustainable way without, because as you say, we don't really want to use more land for farming that we do know, because that's going to be also a problem for the environment. And so it's always the trade-off, as you say. And that's the real challenging thing. And I'll spend the last 15 years of my career trying to figure that out, and I still haven't got the solution. So, but I think that's why those kind of discussions are important. There is somebody, Sophie here, asking, probably a question for you, Emma. How are you engaging policy?
Yeah, I do want to hit Sophie's. I also would really love to take this moment to respond to Audrey's, which is a really nice one, which is around farmers are in many cases overwhelmed and mental health challenges are real. Farming for soil health might not feel like an imperative when they're already juggling so much, and how have the farmers you worked with created the mental space to make such a fundamental shift on their farms? Because I think that's real. I think, Derek, you were also sort of alluding to this, like the real challenges on there. It's one thing to just be like, oh, there's so many benefits here. We win. Like, let's just do it, right? But there are real costs. I think our model, we work with farms across the adoption spectrum. So we're working with folks that have already adopted cover crops. and no-till and are doing a lot of these practices, we also work with folks that are just starting, right? And there's a space in our model for both. And we add sort of additional discounts to capital the more that you invest, the more years that you invest. And so whenever I speak with farmers for the first time and get to know their operations, if they've already adopted the practices, I ask them, how did this start? Where did you make the turn to start adopting and investing in soil health? Because it's still not that common, right? A lot of folks, the overwhelming generality in those answers, and I'd be curious from Dan and Jason and Matt too, when you guys work with farms, is they are experimenting. So they tried cover crop one time in one field, right, on like a 40-acre block or maybe even a 20-acre block. And so this now is the result of about 5 years of trialing and sort of tinkering on the edges, because they have a lot on their plates, right? And often it will come where someone de-risked that adoption. Someone paid for the cover crop seeds. Someone was giving you a cost share program. So those dollars, I think, really matter because they offset the immediate cost. It is operationally, logistically challenging. The other thing that we do when folks are just starting is to try to connect them to local technical service providers. Someone else mentioned the importance of agronomists and others that can support. Absolutely true. Many folks on Matt's team, Abby Wick in particular, and several others at Syngenta have done a fabulous job with their soil health cafes. If you haven't seen them, they're really great. But just in general of like sort of supporting that connectivity, we're a capital provider. We're not going to give you advice about cover crop seed, but we do want to connect you with someone who will help you be successful and help take some of that operational executive function, like support you in that of like, okay, what is the actual seeding rate and date? What kind of mix of species should you do? How should you think about terminating? All of those new things. But again, it was that tinkering. And I think that's actually, to just get a little bit broader, some of the challenges with carbon markets in soil carbon is that it takes a lot of experimentation, and this binary, is it additional or not, really does a disservice to the system, because there's so much risk involved and so much cost involved that you want to step into it slowly, rather than going from like 0 acres to 1,000 acres in cover crop. But I would turn it over to the rest of the panel for how they've seen farmers make that shift.
Yeah, I'd plus one everything Emma said there, and add that, yeah, I think being able to de-risk early, experimental work that farmers are doing is a huge thing. That's at MAD, we have a fund called the Regenerative Catalyst Fund. That's a big, kind of premise of that whole fund, is that we can give people either 0% interest loans or grants to sort of help them take that first step into the production system that they're sort of dreaming of or imagining, or that better aligns with their goals and values. I think also too, to this point, it's mental health challenges are very real. A big piece of that is sort of creating better financial outcomes for farmers, where we can. A lot of that has to do with policy. We're coming towards the end here, so we don't really have a lot of time to talk about policy, but I think that's often the elephant in the room. How do you create markets that actually reward farmers for good work in doing what we're asking of them? But curiously, I think a lot of the farmers that I've met in the regenerative world too, that sort of feeling of overwhelm is sometimes a catalyst for them to transition too, right? They sort of begin to feel like they're having this huge uphill battle over and over, season over season, and that they just need to change something big, right? Like, start growing a new crop, start doing something totally different. And they often find, sort of, something new there. Doesn't necessarily, solve all of those problems, but, just to sort of say that sometimes that's the response that we see people have. But, I think it's just the truth that we need to sort of continue to sort of create a sort of civil society infrastructure that supports farmers and sort of, all the sort of important work that they do to feed us. So to the extent that we can sort of keep that focus and address their real needs and listen to them is sort of critical. And it will hopefully create the outcomes on the ecological side that we actually want.
Somebody who haven't got their name, but it's slightly off topic, but it's a subject I'm passionate about, so I'll take the question anyway, which is, if we solve the food waste issue, we may not need more land nor increase productivity. And yeah, food waste is a major issue. It's estimated that sometimes up to 1/3 of the food we produce is wasted. And depending where you are in the world, if you're in high earning country, a lot of that food waste happens in the house, the salad that goes off in your fridge and that kind of thing, or you cook too much and you just bin it, or that kind of thing. In low earning countries, that's quite different. Often it's a problem of infrastructure. It's getting actually the crops to the consumer, or the produce to the consumer, because there's no cold storage chain and that kind of thing. But something that can be done there is improving seeds and developing different fruit and vegetables that have got longer lasting life and that kind of thing. So actually some of the technology is quite important as well. Sorry, I just wanted to, this is one of the subjects I love. So I don't know if anybody else got a view on food waste. But otherwise, Kieran is asking, how important does the panel feel that modeling at the farm level, as well as regional and national level, to both ecological and economic outcomes?
I can just answer that quickly. I think we've heard a little bit already. It's critical. It's not going to solve all the problems, but it helps us target. It helps us be more efficient with allocation of capital, with allocation of resources, with targeting of interventions. So I think it's really important.
And we're coming towards the end. For people joining us online, we plan to do just a half an hour chat initially. We're already down to 50 minutes, so I think we'll take one more question and then we'll wrap it up. Richard just put in a question. Can someone comment on how we propose to address soil health with smallholder farms in Global South? Any stellar examples of work being done that you can point to that would be welcome? Jason, you've got the Reverte program in Brazil. Could that be an example?
Reverte is actually a little bit larger growers. I spend a lot of time with smallholders in sub-Saharan Africa. There's no question this is a super challenging problem, infrastructurally, supply chains, value chains. What I would point to, especially in this particular moment in history, is the critical importance of big organizations like the Gates Foundation is very, very active in this space. USAID, when it existed, had a remarkable sustainable intensification program aimed at smallholders that had some amazing elements. And the German Development Organization, Swedish Development Organization have done a lot. So the best thing I can say right now is these programs are critically important. They're also threatened globally. And for everybody on the call and in this area, we should do everything we can to support continued engagement with those smallholders.
Emma, Dan, Jason, thank you for your time, your brilliance, and for doing that hard work of turning science into solution. All right, we're almost out of time, but before we wrap, Matt, we entitled this talk "The $1 Trillion Blind Spot." After hearing this introduction, what's the one thing you hope people can take away?
Well, we may have undersold it with just 1 trillion. I think it's true that we underestimate the financial value of soil health and how much that we all know soil health practices. We know what works. We know the technical challenges, the human challenges, but the system is just really not set up to incentivize, finance farmers in those transitions. So the work that people like Emma and Dan are doing is so critical to unlocking that. But it's really we have to address these systematic challenges. The technical solutions are part of that, but they're not going to go anywhere if the system's not set up to incentivize and support improvements in soil. That said, I think we're at a really important inflection point. There's been so much recent activity around recognizing the problem of soil degradation and developing some really ambitious programs and novel creative solutions to unlock that value. So I think we're at a turning point here, and the key is working together across those silos, bringing together different parts of the system. Includes policy, it includes finance, includes large NGOs. All of those, we're at that precipice, and the data is going to be a key part of that. Again, we're at the precipice of making that data more accessible, more useful, more actionable. So it's an exciting time. We have a lot of big challenges ahead, but I'm really encouraged by everything I'm seeing.
Thank you, Matt. And I guess my takeout is we probably don't need to convince people that soil is important. We need to convince them that soil is valuable, because when we start measuring it, monitoring it, and pricing it correctly, hopefully the capital will follow. So thank you to the panel. Thank you, Matt. And thank you to all of you online. Great question, great interaction. Keep the comments or the interaction going in the comments below. Maybe we can put some more information. We'll put some more links with the study we've mentioned. But thank you very much, and happy World Soil Day, everyone.